Opendoor stock has been front and center for many retail investors after one of the most exciting weeks we've seen in a long time. The company's shares put together a remarkable 5-day winning streak, closing out the week at $6.65. That marked an increase of 69 cents on the final trading day alone, which translated into an 11.5% gain. But when you zoom out and look at the whole week, it was even more impressive. The stock gained nearly 50% in total value. That's a stunning rally in such a short time, and it's exactly the kind of move that turns heads on Wall Street. Now, anytime you see a rally of this magnitude, especially one that unfolds over consecutive days, the natural question is, can it continue, or are we due for some profit-taking? Heading into the new trading week, that's the conversation we need to have. Traders who bought the stock under $5 may be tempted to lock in some gains. That's not unreasonable. It's basic psychology. But the real story here isn't just about short-term moves. It's about the momentum that has been built, the catalysts that are on the horizon, and the way retail conviction is reshaping the narrative around Opendoor. Let's start with the retail base, because it's impossible to talk about this rally without acknowledging the role of the open army. Retail investors have been pounding the table on Opendoor for months, even as institutional sentiment was mixed or outright skeptical. The last 5 sessions showed what can happen when that conviction gets traction. The open army wasn't just buying. They were building a movement. You could see it in the chatter online, the coordinated enthusiasm, and the willingness to step in even after several green days. That level of conviction is rare, and it creates a floor of support that makes rallies like this possible. But it wasn't just retail enthusiasm driving the tape. Activist pressure played a big role as well. Eric Jackson has been relentless in his campaign to push for board reform at Opendoor. His recent meetings with key figures, including Keith Rabois, have underscored a shared frustration that the board has been too conservative and, frankly, too much of a drag on shareholder value. When an activist aligns with retail sentiment, you get a powerful combination. The activist brings credibility, resources, and connections. Retail brings energy and volume. Together, they create a kind of accountability that companies can't ignore. And that's exactly what we're seeing now. Anthony Pompliano also stepped into the spotlight by announcing that he added to his position. Pompliano has a strong following, particularly among retail and crypto-native investors who value his ability to spot disruptive opportunities. His decision to double down on Opendoor wasn't just about the dollars he put in. It was about the signal it sent. It validated what the open army has been feeling all along, that this is still one of the most asymmetric opportunities in the stock market today. That kind of validation matters, because it brings in new eyeballs and fresh capital. Meanwhile, Interim CEO Shrisha Radhakrishna has been quietly but meaningfully shifting the company's communication strategy. One of the biggest criticisms of Opendoor over the years has been a lack of transparency. Investors often felt left in the dark. Shrisha seems intent on changing that. The launch of a community hub for retail investors may not sound revolutionary, but it's a step toward building trust. When retail investors feel like they're being heard, they're more willing to hold through volatility. That creates stability in the shareholder base, which is exactly what Opendoor needs as it navigates this critical phase. And that brings us to the CEO search, which is arguably the single most important near-term catalyst. The board is under pressure to get this right. Investors want a visionary leader who can scale the iBuyer model, refine execution, and rebuild credibility with the broader market. The wrong hire would be a step backward. But the right hire could immediately re-rate the stock. Leadership changes matter, not just symbolically but operationally. A strong CEO could accelerate partnerships, sharpen the company's cost structure, and set a clear path toward profitability. With activists watching closely and retail demanding accountability, the board doesn't have much room for error. All of this is happening against the backdrop of an improving macro environment. The Federal Reserve is widely expected to cut rates in September. If and when that happens, it will be a meaningful tailwind for the housing market. High mortgage rates have been a major drag on transaction volumes, and by extension, on Opendoor's business. A rate cut could start to ease affordability pressures, bring more buyers and sellers into the market, and increase the velocity of housing transactions. That plays directly into Opendoor's sweet spot. Combine that with the fact that Opendoor has already done significant work to streamline operations, and the setup for a revenue rebound is real. Now, let's balance this optimism with some realism. In the short term, it's entirely possible that we see profit-taking. 5 green days in a row is rare, and some traders will want to secure gains. That could create volatility in the next few sessions. But that doesn't change the bigger picture. For long-term investors, dips in this environment are opportunities. The narrative has shifted. Opendoor is no longer being dismissed as a failed experiment. It's being discussed as a turnaround story, with real catalysts that could unlock significant value. It's also worth reminding ourselves of the long-term bull case. Some analysts and retail leaders have pointed to an $82 price target. That might sound aggressive when the stock is trading under $7, but it's not pulled out of thin air. The US housing market is a multi-trillion-dollar opportunity. If Opendoor can capture even a modest share of that market with a sustainable and profitable model, the upside is enormous. The stock doesn't need to win the entire market. It just needs to prove the model at scale. If that happens, valuations in the double or even triple digits become possible. Heading into the pre-market, the key things to watch are sentiment and volume. Will the open army continue to show up after the weekend? Will we see institutional buyers start to chase the momentum? And will there be any fresh updates from the company on the CEO search or community engagement initiatives? Those are the kinds of catalysts that can sustain the rally. Another important thing to keep in mind is the dynamic between retail and the board. Retail investors are more organized and more vocal than they've ever been. The board has to recognize that ignoring this base is not an option anymore. If activists like Eric Jackson continue to push from the top while retail pushes from the bottom, the board will be forced to respond. That creates a unique situation where change is not just possible, it's inevitable. So where does this leave us heading into the week? It leaves us in a position of cautious optimism. Yes, volatility is likely. Yes, profit-taking could appear. But the momentum is real, and the catalysts are tangible. We have activist oversight, retail conviction, improved transparency, a major leadership decision on the horizon, and macro support from expected Fed cuts. That's not just a feel-good story. That's a recipe for potential upside. The takeaway for investors is simple. If you've been riding this rally, congratulations. You've seen firsthand what conviction and momentum can do. If you're watching from the sidelines, understand that opportunities like this don't come around often. The setup here is asymmetric. The downside is limited compared to the potential upside if the company executes. That doesn't mean it's risk-free. It never is. But it does mean that the risk-reward profile is compelling. Opendoor is proving that it's not just a speculative trade. It's a company with a vision, with retail support, with activist oversight, and with real catalysts that could change its trajectory. The rally to 665 is not the end of the story. It might just be the opening chapter of a much larger move. As we head into the pre-market, keep your eyes on sentiment, volume, and any updates from the leadership front. The open army is energized, and the market is watching. Momentum is back in play, and the story remains bullish. This is what makes disruptive growth investing exciting. You don't get these setups every day. But when you do, and when the pieces start falling into place, the results can be extraordinary. So buckle up. The next chapter in Opendoor's story is about to be written, and if the past week is any indication, it's going to be one worth watching closely.